Apple, the tech behemoth, recently released its quarterly earnings report, and the results have left analysts and investors with a mix of excitement and apprehension. While the company exceeded expectations in some areas, it fell short in others, painting a complex picture of its current standing and future prospects. The report has sparked intense scrutiny, with experts dissecting the numbers to understand the underlying trends shaping Apple's trajectory. One thing is certain: Apple's performance remains a significant indicator of the overall tech industry's health, and its earnings reports are closely watched by investors worldwide. This quarter's report, however, carries even greater weight, as it provides clues about the company's ability to navigate a rapidly changing global landscape marked by economic uncertainties and geopolitical tensions. The report's release was met with a flurry of activity on Wall Street, as investors and analysts scrambled to interpret the data and adjust their positions accordingly. The initial reaction was a mix of optimism and caution, reflecting the report's nuanced message. As we delve deeper into the report's specifics, we'll unravel the factors driving Apple's performance and shed light on what investors can glean from this latest financial snapshot. Apple's earnings report reveals key financial figures. Revenue hit $124.3 billion, slightly above expectations. iPhone sales fell short, generating $69.1 billion. This raises concerns about market competition. EPS stood at $2.40, beating projections. Despite this, iPhone's performance suggests challenges ahead. While the iPhone's performance has undoubtedly captured the spotlight in Apple's recent earnings report, it's crucial to acknowledge the growing significance of the company's services segment and other product categories. Apple's services, encompassing a range of offerings like Apple Music, iCloud, and the App Store, have emerged as a formidable force, generating $26.3 billion in revenue and meeting Wall Street's projections. This consistent growth in services revenue underscores Apple's strategic shift towards a more diversified business model, reducing its reliance on iPhone sales alone. The company's efforts to expand its services portfolio, coupled with the segment's high profit margins, bode well for its long-term profitability and stability. Moreover, Apple's other product categories, including Macs, iPads, and wearables, continue to contribute to the company's overall revenue stream. The performance of these products, while often overshadowed by the iPhone, demonstrates Apple's ability to innovate and cater to a diverse range of consumer needs. As Apple continues to diversify its revenue sources and invest in emerging technologies, its dependence on the iPhone is likely to decrease, creating a more balanced and resilient business model capable of weathering fluctuations in any single product category. Apple's performance in China is crucial. Recent results show softening demand, causing concern in Cupertino. Sales in Greater China dropped to $18.5 billion, below the expected $21.5 billion. Challenges include economic uncertainties and competition from Huawei and Xiaomi. Geopolitical tensions add complexity. Apple must adapt its strategies to succeed. Beyond the specifics of Apple's earnings report, it's crucial to acknowledge the broader macroeconomic factors that are influencing the company's performance. The global economy is currently grappling with a confluence of challenges, including soaring inflation, rising interest rates, and geopolitical instability, all of which have the potential to impact consumer spending and consequently Apple's bottom line. The specter of a recession looms large, casting a shadow of uncertainty over future consumer demand for Apple's premium-priced products. Consumers faced with shrinking budgets and economic anxieties may be more inclined to delay upgrading their devices or opt for more affordable alternatives. Adding to these challenges are ongoing supply chain constraints that have plagued the tech industry for the better part of the past few years. While Apple has fared better than some of its competitors in navigating these disruptions, it hasn't been immune to their impact. These macroeconomic headwinds and supply chain bottlenecks are likely to persist in the near term, presenting ongoing challenges for Apple as it strives to meet demand, maintain its profit margins, and deliver on its ambitious product roadmap. Apple's earnings report has sent ripples through the stock market, leaving investors grappling with mixed performance. Despite a 24% rise over the past year, recent uncertainties have emerged. Declining iPhone sales and macroeconomic headwinds have led to cautious outlooks. Recent downgrades by firms like Jefferies and Oppenheimer reflect this sentiment. Yet Apple remains cash-rich with a loyal customer base and a history of innovation. Its strong services segment and investments in emerging technologies provide optimism. Investing in Apple carries inherent risks and rewards. Conduct thorough research, consider risk tolerance, and diversify portfolios. As Apple navigates the complexities of the current global landscape, its future success will hinge on its ability to adapt, innovate, and diversify. The company's legendary focus on product design and user experience will remain paramount, but it will need to be complemented by a keen understanding of evolving consumer preferences, emerging technologies, and geopolitical realities. Apple's services segment, already a significant revenue generator, presents a ripe opportunity for further expansion. As the lines between hardware and software continue to blur, Apple is well positioned to leverage its vast user base and ecosystem to deliver compelling services that seamlessly integrate with its devices. Furthermore, Apple's foray into new product categories such as augmented reality and virtual reality headsets and potentially even electric vehicles holds immense promise for future growth. These initiatives, while still in their early stages, have the potential to disrupt existing markets and create entirely new ones, just as the iPhone did over a decade ago. To sustain its global dominance, Apple must also navigate the geopolitical complexities of an increasingly interconnected world, balancing its presence in key markets like China while exploring new frontiers in emerging economies will be crucial for its long-term growth trajectory. What are your thoughts on Apple's future? Share your comments below. Don't forget to subscribe for more in-depth tech stock analysis videos.